target price at the top edge. Does everybody see we got our target price on the S&P? Yes. Another winning live trade call, guys. Yes or no? We asked, what are you going to do? What are you going to do? What are you going to do at the bearish order block? We went for the squeeze at the bearish order block. We went 71s to a high price of 77s. Another $300 paid into your bank account if you took action. Now, I say if you took action because the classroom we did this morning was to make sure you understand why. Not just take trades. It's not a trade calling situation. It's about understanding the markets. And when you were in the cellar, Kim, everybody thought you were in the cellar. So when we thought you were in the cellar having a wee glass of Pinot, was that another hurricane or another tornado that you had there, Kim? Anyway, so when Kim was in the cellar, we did ask the question, or we did make the point. Guess what, guys? We actually got a confirmation from the bond traders this morning that understanding the lines was quite important. First time in 26 years of this classroom, guys. First time in 43 years of this classroom that we've actually had confirmation that it's important to understand the lines before you use them. Bowled over I was. Bowled over, Kim. I staggered backwards. Staggered backwards. Couldn't believe it. So you can see that the big volume giving you a good excuse. Is this market bearish? No, it's not bearish, is it? It's not bearish. It's just not as bullish on that big volume. For this market to be bearish, this has to be falling. It's not falling, guys. In other words, we're getting what is called a parallel shift. The Nasdaq's going up at the same pace, slightly faster than the Dow Jones. That can never be bearish, right? That is not bearish. So we don't go short. We simply use these areas to book some monies, and we try and stick around to keep the move going. We try and go again. Let's press this bad boy right here, right? Press it. Keep the momentum going. Now, we know it's obviously not as bullish as it was, and we obviously acknowledge that that's the case, and we start drawing some areas, and we start thinking about, well, if these buyers here can't take the price up, then we know what's going to happen. We've done this exercise already this morning. If these guys can't take the price up, then they're going to just drag their price down into this buy trade here. This bearish order block becomes buyers pending, doesn't it? This bearish order block becomes buyers pending. So when we know that, we can obviously look at that and say, right, buyers pending. And all of a sudden, we've now got a little bit of a knowledge and a little bit of interest in these areas as a possible buy reversal if we were to get a little spring trade through this area. So there we go, guys. Sensational, right? Absolutely sensational. Great trades, great outcomes. How did our bond do, guys? Did anybody see how our bond actually ended up performing? Oh, yes. Wasn't too big a surprise. Come on. It was only $1,000 plus change. It was only $1,000 plus change, correct? Well, there's our bond, guys. We told you about the buy trade. We talked about it. We told you about the buy trade. We talked about it. And then we've just traded into the high swing up here. We've just seen the 16s getting taken out. Another amazing, amazing, amazing outcome. Why are we not selling bonds? Because the bond price has to diverge against the purple line as well. Was the bond price diverging against the purple line at the bottom edge? Yes. Was the bond price diverging against the purple line at the top edge here the last time? Yes. Is the bond price diverging against the purple line in this break higher? No. So is this a sell? No. What are we doing? Holding on to the long trade. Letting it rip. Letting it rip so far. Trying to take it up. But a QE, what did I mention this morning about the Eurozone? the possibility that there might be a bit of QE coming in. They're trying to ramp it up to ramp it back down again, right? That's the kind of chatter that's going on. The ECB are trying to ramp up rates so they can drop rates, and then if that doesn't work, they're going to have to flood the market with cash again. The Russians are having a great time of it, aren't they? Absolutely great time of it in terms of how this is playing out. So there you go, guys. 152.16's live bottom edge. 153.26's. $1,300 per contract on the way up. Crazy, 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 crazy. Unbelievable.